Welcome to It's No Secret, a podcast for Kiwis who want their money questions answered.
Ready, steady, go.
This podcast will answer the money questions you may or may not have on your mind. We'll talk to real Kiwis and share truths about our own financial lives.
Both the successes and the failures. Because the truth is, there is no secret to achieving financial freedom. Cool. Okay, hello and welcome to another bonus episode of It's No Secret. I'm Kat.
And I'm Christine.
Today on the show, we have a Money Moments guest. This is where we chat to real Kiwis about their experiences with money, the ups and downs and everything in between. Today, we're joined by Dean Anderson, founder and chief executive of Kernel Wealth. Kernel is an index fund manager and investment platform that helps Kiwis grow their savings over the long term. Dean is also our boss and an avid listener of the show. However, we suspect he might skip this episode because who really likes listening to their own voice anyway? Previous to founding Kernel, Dean held roles in the financial services industry, notably as head of product at Smartshares and a data analyst at the NZX. He's a self-proclaimed Southlander, currently residing in Auckland with his partner Nigel and their fur baby Cooper. Dean has a wide range of experience as an investor, starting his journey with shares and investment property through to raising capital to start a company in a highly regulated industry. So, welcome, Dean.
Hi.
I was going to say nice to see you, but I've seen you all day. Sorry.
Yeah.
Thanks for joining us today. I think as a starting point, as with all our guests, we like to start chatting with how your relationship with money was formed. So can you please share what your relationship with money was like growing up?
Yeah, I think we talk a lot about the fact that everybody's relationship with money very much shaped by those early years and how your family talk about money. I grew up in a household that was, split parents from as long as I can remember. So each did their best to raise me within, I guess, fairly standard Kiwi household upbringing. Low middle income earners, the challenges that come with that, and doing what they can to obviously try and provide good structure and all the things that I needed in life. So fairly standard upbringing in that sense. I probably got to see the other side of that as well. I had extended family members who had gone out and started their own business and sort of saw the alternatives out there. I would say broadly, though, that again, like a lot of Kiwi families, didn't really talk about money. Mm-hmm. So there wasn't a lot of open conversation about it. Just that general sense of it's not abundant and we get by day to day.
Nice. Were there any standout money lessons other than the ones that you just mentioned?
No, I think it was just about prioritization. Like I don't think my parents were great at money. Like there was never a conversation around investing. Very much it was making ends meet, trying to provide, some of the niceties, going to a batch and having the holidays and things like that where we could. But that was kind of fairly standard. Nothing that kind of jumped out around great wisdom or tips.
Golden nuggets.
No.
Yeah.
So I guess how did you start to learn about money when you got older and obviously started working? And was there a point in which maybe you got your first full-time job, or was it earlier than that you sort of remember, like, I now have to be in control of this part of my life?
I guess behaviour-wise, it very much was a lot of, broadly, not just money, but a lot of focus on good behaviour, good morals, all of those sort of key elements. And so I was always very proactive in working. So I started part-time work. I remember at university, I'd work through university part-time and then summer holidays. And so very active and wanting to go out there and make a change and get a job and do all those key things. A lot of it was probably shaped with, I had some great extended family, auntie and uncles, who had started their own business, farming and accounting and other things, and they were great connections. Like, we're a relatively small family. I've only got a couple of cousins, and so small, close-knit family where I could have those different conversations on different topics. So I was quite fortunate in that sense. I had different people within my family group that I could talk to, that I could learn from on specific topics or ideas, and we would be connected through these different themes. So some of it was around investing, some was around business, others was around just the general life. So,
yeah. Cool. Nice. And so I guess fast forward to now, what is your relationship with money like?
Evolving. it's I guess I'm in quite a different position. I guess I've never really been somebody that's money dominated. I'm not focused on money at all. It's not really something that gives me any joy in life in the sense of I'm not going out there trying to make more money or have more money. I'm quite content with my lifestyle and how we live. And so at the moment, it's really the focus on the things that I am really engaged with and stuff that does motivate me and I'm passionate about. And that is things like growing Kernel. And that's, again, not done for the monetary sense. It's done because I'm just really passionate about what I'm doing there. So I guess fortunate to be in a situation where I'm content and happy with financial situation and allows me to focus on the things that I'm probably more engaged and more passionate about.
Like money.
Yeah. Money podcast.
Yeah.
Money education.
Index one.
Exactly.
Yeah.
So we're obviously going to talk about Kernel and starting a business because that's something that we've talked about on the show, but I think we probably have a bit to cover before we get to that point. And I obviously have the benefit of knowing you personally and know that you have invested in shares, funds, property, and obviously business in your short 32 years. So where exactly did you start?
Auckland Airport.
How'd that work out?
No, it was, as much as I said my family didn't really talk about investing, I did try and drive the conversation with it when I got older. And it does feel like a long time ago, but it's not really, hopefully. It was very paper-based. So I had a file where I had all the paper contracts and all the paper notes and contracts that you used to have with your broker. My parents gifted me, I think, $250 worth of Auckland Airport shares for a birthday. And that was the first sort of experience. It was with Craig's and had all of the paperwork and had to keep all the notes. And you can understand why it was challenging because you'd lose your VIN number and other things. So I started with that, got into some direct shares and continued on that journey. And obviously at that point, I ended up started working at NZX, which kind of got me immersed into that world further. That probably accelerated my investing activities. Probably down the wrong pathway initially, and that was again buying more direct shares and probably being a bit speculative. Hindsight, looking back, could have done better with an index fund, but it was really enjoyable, and obviously, it's a great learning experience.
Yeah, and I guess as well, maybe being in that environment, you probably have that implicit pressure of wanting to be buying and selling, right? And you're an analyst, and it's like if you're looking at all these numbers all the time, you kind of feel like, well, I should use this information that I have to try and make money or invest well. And then lo and behold, at some point you kind of learn a different way. So how did you get into, I guess, understanding what index investing is? Because we often talk about the fact that people don't really understand that now. And I guess reflecting back on that, that was probably over 10 years ago for you, which would have been fairly early days, right? In the sense of index investing being known as a more mainstream thing in New Zealand.
Oh, it was. It was very, very, well, it wasn't new for New Zealand in the sense that the products that we are at the time dealing with Smartshares had been around for a while, but they were the only option at the time. There's only a couple. So really, it wasn't something that was mainstream or talked about. I don't think people had read The Barefoot Investor at that point.
No.
And so seeing it from the inside, obviously, we're fortunate in getting onto that journey relatively early. I guess coming back to more broadly investing, still the main focus is with a lot of Kiwis was property. So that was probably the next sort of stage that after buying direct shares, I actually didn't get into the indexing game. I reflected back on how I could have done better with indexing on the direct shares, but actually took those direct shares and then went into the property space. And that was kind of the next phase of my journey.
Nice.
Interesting.
So can you tell us about that, the property empire?
I feel like Christine's saying this being like, how do I build a property empire? But also noting that this was probably quite some time ago, a very different time and market, right?
I was just trying to recall actually what it was. So I didn't buy an investment property, I bought a house. And it was a small little workman's college in Mount Cook in Wellington. Very excited about having a little 2-bedroom pad, central, with a backyard. And it was built in 1880s. And it was $380,000, and at the time it was 5% deposit. So you're talking $20,000 to be able to buy a house.
Yeah. Different time.
It's really different though, right?
Yeah. Emergency fund is $20,000.
Yeah.
Context.
Exactly.
It is just fortuitous in terms of, where the markets were at. Wellington had also been, like I was living in Wellington for a number of years, it was a relatively flat property market for a number of years, actually. And so there wasn't great expectations around property. It was pretty easy to get into, 5% deposit. I would say, though, it was actually stressful because we had pre-approval with our main bank that was then declined after I'd signed the contract. So then I went into that lovely situation of I've got a day to find a bank that is now going to lend me this money, but managed to sort all of that and settle into the place and was there for a number of years. And then that led to, obviously, prices go up and then we're able to go from there.
Nice.
So did you, I know, like with, say, some of your then further property purchases, was that mainly using the equity in the house? Was that kind of the strategy that you employed, or were you also saving outside of that?
Paying off the house, I was very fortunate to be able to form a partnership with my auntie. So again, I think it's probably not uncommon for people that are interested in the property space to do that with family.
Pair up with someone.
And that may be parents helping kids into a first home or investing alongside a family member or friend. I think it's a very common approach to how people are tackling property, particularly in this environment. But I had an auntie who also lived in Wellington, who I was very close with, and we both were relatively passionate, not, I guess, broadly about property investing, but property renovation and getting involved in the sort of the DIY aspect. So we actually went together and bought a property in Mount Vic, and that was Mount Cook, and then that was pretty much our weekends together. So I spent probably 6 months in the evenings and every weekend, just me and my auntie, working on stripping out an entire old villa and renovating it up and getting it ready for rental. And so that sort of, I guess, got me to the next stage. And then when I left Wellington, we had a couple of places that we'd done that on, and we felt like it was an opportune time for us to look at new ventures. And so we sold that, and that sort of led to where I was.
Yeah.
Nice.
Yeah, nice. I guess, I mean, you kind of touched on the fact that there's a lot of property is a big dream for Kiwis and that kind of stuff. So during that time, whilst you were buying and renovating, did you get sucked into the kind of like, oh, maybe I should just buy my dream house, or like that feeling of like, I should stop doing this for other people's benefit and maybe just buy something for me?
It was just a really, Wellington also, I guess, specifically on property, Wellington is quite different. There was a lot of tenders. Everything was done by tenders there, which was quite an interesting experience as well, because you never know where you're at in the scheme of the market. I enjoyed it as the project side of things. It was something I enjoyed spending time with families, working on the weekends. I wasn't in a rush, and I still the same today, like I talk now. I've chosen to rent in Auckland because I'm just not that phased about needing to be in a house of my own at the moment. I don't want to deal with the maintenance. I've got other things in my life that are priorities, and I'm quite content having, at the moment, quite a great rental arrangement where I haven't seen the landlord in 4 years, and it's very easy for me to focus on the things that I really care about. So on the weekends, can lock and leave. It's great. Property was interesting generally. When I moved to Auckland, I have a family that farm in the Hawke's Bay. After having sold in Wellington, I ended up buying quite low socioeconomic area houses in central Hawke's Bay. And, we're sort of talking in the $100,000 home range. And it was quite interesting because the whole street was owned by one lady. And a lot of people were on wins and other arrangements in there. Bought them because I had a good knowledge of the area and what was happening, but very conscious, I think, I've always been from day one that there is a balance there, and it was I saw the opportunity to actually fundamentally change those houses for the people that were in it. They were pretty poor condition, and there was really no reason for that. It's not that big of an investment to go in there, and tenants and people that are living in those homes will treat it with great respect as well if, you give them a nice environment. And so that again was another side project actually partner got involved in, and we went down and again DIY'd it, spent a weekend painting the whole house and tidying it all up and making it livable, I guess. So it's a very rewarding being able to kind of change a home for somebody as well.
Yeah. And then did you enjoy being a landlord? Because I know
Great
we've
question.
we've also talked about, the considerations that sometimes property investment is maybe not as easy or as hands-off as people envision.
I think I was very lucky. Wellington was easier. We dealt with people directly and got a good sense of who was going in there. Hawke's Bay, we really could have been getting anybody. And you have that risk with anywhere you buy a property. You never know who you're going to get. And it's getting increasingly challenging on that front. And there's a balancing act there between how do you manage tenants and evict them if they're not right, but also giving people the confidence that they've got a home. Hawke's Bay, we had a property manager, but again, even then, you do just get crazy things happening. People live very different lives, and the way they respect property and their surroundings and things may not be to your standards. And I think still in the scheme of things, relatively lucky compared to other stories that we've heard. So it's definitely not straightforward and can be very time consuming. And you can go down sort of a bit of a hole chasing that. So,
Do you have any examples of like nightmare tenants or like any crazy funny stories?
Oh, it's just all sorts, right? The broken toilets and the doors off the pantry cupboards, and then the stove's not working. It's just you end up with
a mix
of things. It's like, what are you doing?
What are you doing with that picture? Door.
But even like just the, seeing how some of them were living and treating in the spaces, not cleaning and those sort of elements, I think can be quite eye opening. And so I, like I said, didn't grow up in a affluent household, but very much structure around cleaning and those sort of elements.
Doing some of that bare minimum. Well, what would you think is like bare minimum that you would expect from others?
Yeah, exactly. Yeah. It's just, I guess, the respect piece.
Yeah, definitely. Definitely.
Cool. So I guess then whilst that was kind of happening in the background, you had moved to Auckland for your role anyway, and presumably that was sort of prompted a little bit by selling some of the properties in Wellington and then making a bit of a shift to move.
Yeah, I had to move with work. I chose to make a change. I'd been in Wellington. So correction, Mainlander, not Southlander. So I'm from Nelson.
Sorry.
Nelson. Nothing wrong with Southland, but Nelson is the place.
Controversial.
And I was in Wellington for about 5-6 years, I think it was, and then moved to Auckland with the job at NZX, involved with Smartshares. When I moved, I didn't know anything about Auckland, had no idea about it at all, and so took the Wellington approach of I just want to live central so I can walk. I just don't want to deal with traffic and the unknowns. So found a place to rent relatively central. That's kind of been my life since. And as part of that, I'd sold the place in Wellington and was working at NZX.
Cool.
Nice. And then I guess we get to 2018.
Yeah.
And
decided to leave NZX.
Gloss over the whole chapter. But we get to 2018. You're obviously in Auckland. You decide to quit your full-time job, which is scary for a lot of people, but also I think is relevant to talk about because, if you spend any time on social media, which I'm sure everyone does, you do hear a lot of chatter around like the dream of, particularly at the moment, right? There's this whole movement for people to be quitting their jobs post-COVID and
it's the great resignation, right?
Yeah, getting flexibility or starting their, pursuing their side hustle, whatever it might be. But I think sometimes...
And the 32% of Americans are going to have to change career by the end of the year because of the fourth industrial revolution. But
exactly.
If you weren't aware, 1 in 3 of you are about to lose your job over the next decade.
But I guess we often hear like all the positive side of, people doing that, right? All the success stories, but perhaps not so much of the reality. So when you decided to do that, I guess what we want to know is how did you decide to do that, and what was it about your finances at that point that enabled you to do that? Had you actively done some things to give yourself that flexibility, or was it kind of chance?
So I guess briefly on the in-between piece, I was with the NZX for 6-7 years, I think it was. Some fantastic managers and experiences there. When I was in Auckland, part of the move to Auckland was the fact that we had acquired a business and the two founders were still heavily involved, and they, I guess, got to know them as well over that period and talk about their experience of starting a business, and some great managers who also had their own business. So I had a lot of people that were around me that had shared their views on that. One of the founders of the business we acquired said the greatest thing in his life was actually being made redundant. It's that forced moment to, I guess, throw caution to the wind. You don't have to, you're not considering all the other what ifs, and you just have to look at what's in front of you. And so after a number of years at NZX, I kind of felt, well, I've done my dash there. I didn't really know what I wanted to do further within that organization. Loved sort of the career opportunity that I had there, and decided simply to kind of do that in the sense of step out the door. No plan. There was no intention of anything. There was no structure. It was walk out the door and see what happens. I guess the things that were on my mind with doing that were, somebody that I'd worked with, they had sort of talked about their experience of having previous businesses and the challenges that come with doing this as you get older. They have kids at school they've got to worry about, and school fees and mortgage and partners and dependents and all those sort of things. So as life goes on, it gets harder and harder to make that leap of faith, be it to change career, change job, to start a business. It just gets harder. So I was very conscious of that. I was conscious of what sort of the insights from, being close to sort of the founders of the previous business we acquired. And then I was also in that position where, sold a house in Wellington, was renting. I had enough money in the bank that I didn't need to go and find a job tomorrow. Like I could pay the rent. I could, take time out to decide what was going to happen next. Ended up deciding to do a little bit of contracting work because during that period I wasn't, still wasn't that clear. So did a little contracting out of mental stimulation and something to do. I was fortunate in that sense because I know it's not always that straightforward or easy for others just to be able to walk out and know that, I don't need to do something for 6 months. I can actually, take some time.
Yeah. I guess as well, though, like you obviously fairly quickly fell into the contracting work, and sometimes it's easy to overthink that, I need like 12 months of my expenses covered. But, more often than not, actually, you just need a little bit of money kind of stockpiled to get you through for a bit. And then inevitably an opportunity will pop up.
Yeah. Yeah. Exactly.
Even if it's not like, what you ended up pursuing, it was something to kind of tide you over. And
I guess those were the backstops for me. I had no dependents, no partners, no mortgage, right? Yeah. So I didn't have any material weighing down expenses or things on the back of my mind going, my God, I've got to go home and take care of this. Worst case scenario, there's always a good backstop. And same with, I guess, the career element was I knew I had a good enough skill set. I was confident in my own ability to go out and find a job if I needed to find a job of some form. So again, I guess that gave confidence to walk out the door knowing, hey, worst case scenario in 6 months, if I haven't figured out the dream ideal situation, I will find a job and we'll go from there.
Yeah.
Nice. So I
Didn't go that way.
The natural progression takes us to starting Kernel. So can you please take us on the journey of coming up with the idea to start Kernel, and then also approaching the funding side of the business? I think that's something that we haven't really touched on the podcast that much.
Yeah, I think talked quite a lot previously in a number of places about, the whole idea with Kernel was started off just this itch of knowing the inside of the financial services sector, the complexities of it, but also how legacy some of the processes are, the technology, how a lot of things are designed in the interest of the company and not the customer. And felt that actually we were at a place and a point in time where if we sat down with a clean sheet of paper and really focused on how do we do something better for the end customer, that they're fully in control of it, how would we design it? And so that's where it started. Worked back from that and spent a number of months kind of just thinking about, well, how do we tackle those fundamental pieces? Because it also wasn't, for me, it was more than just making access to different investments easy. We also felt that there was the end products that people were investing into could be improved as well. So there was that whole end-to-end piece we wanted to tackle, and that's what led us to going and becoming an index fund manager ourselves, because we felt that we could design it with today's technology, lower fees, better tax, all the little hidden things that just we know will do better for customers over the long term. So we started on that, but as with a lot of businesses, they do require money to get going, and there are different complications with all sorts of businesses. The one thing that I guess that stands out with Kernel is that we are a licensed fund manager, and so that has a significant regulatory obligation. And part of that regulatory obligation is also that we have to have a significant amount of, I guess, capital funding. We have to have a fully formed, structured business from day one that's got every single policy written, that's got the employees on board, and has a lot of money in the bank to cover a long runway of expenses. It's not like a lot of other businesses where you can kind of just start it slowly and see it grow and invest further into it as it goes.
Buy like $3,000 worth of stocks.
Yeah. It's
Put an online store up.
which again is another major leap of faith, because it's an all or nothing. And you don't know, like you don't know if this thing's going to work or not until you turn it on. But you can't turn it on until you've done all of these things. And
so just to cut in there. So I guess market research, was it purely based on, I guess, your experience of the industry? Because that is like validation of the idea, really.
Yeah. So again, at the time, limited range of index options, pretty limited range of technology solutions. And, obviously the world is moving quickly in that space, but we've, very conscious of what was going to happen there and how the world was going to shape, and even further, how it's going to continue to evolve over the next 10 years. So very confident in what we, believed was happening within the market and how the market was going to change. Key then to your point was we needed more money. This wasn't something I could just go and, well, again, interestingly, the money can't come from lending. It couldn't come from, we couldn't just go to a bank and borrow either, because of the regulatory requirements, as it couldn't be from debt. So it had to basically be, we had to have people put a whole bunch of money into the business. So obviously I had some money that we were able to put in from the house. And again, for me, come back to the point, this was never done for personal financial reasons. I was comfortable putting everything into this thing because it was something I was passionate about. But we had to go and find others that were equally as passionate, that really wanted to back this journey. And so that was kind of that first phase, and that was happening simultaneously, or very early on. It's a very weird experience going and trying to encourage some people to become equally as passionate about a business that's nothing more than an idea on paper with no regulatory license or approval, no proven customer case, and say, can you give us a whole bunch of money, but also not take the whole business away from me, please, so that we had the future ability to grow. And so that was a actually surprisingly really good journey for us, and we managed to find some great partners and some individuals to really come on the long-term journey with us, sort of backed us from day one.
Cool. Yeah, love that.
I got to ask, because I think, anyone that's thinking about starting a business or is in this position, probably the hardest challenge, particularly as a sole founder, I think, is how do you deal with like the conversations that are going on in your head as you're having this journey unfold, and particularly thinking about, whilst you don't have a lot of, dependence or anything kind of tying you down, it's still a significant financial investment on your behalf, and putting a lot of things into the one basket, or just tying a lot up in one idea, right? So how were you talking to yourself to convince yourself that was a good idea?
Again, the support network, I guess, in particular, I did have a couple of family members who had started their own businesses who could kind of relate. One who had actually gone through the journey of starting regulated business within the sort of financial services space. So that was great to have that sounding board to talk about their experience. They actually never got off the ground. So there was a lot of great learnings to be able to share, and the frustrations, because it is one of those things that, again, because of the regulatory nature of it, there are a lot of very quiet periods. When you physically can't do anything, where things are waiting on the regulator to come back and say, yeah, you're good to go. And so you've got everything, you're sitting there, and it's like, so you think, you're alone with your own thoughts. And I was, and remember, I had moved to Auckland, so I was in Auckland. I didn't have family here or anything. So it was kind of again, you're kind of siloed from it all. I think it was mainly just continuing to reflect on the exciting days, the milestones, the little wins. And it's the same today. There are still days, there are still some days that are pretty rubbish. but you remember very quickly and keep focused on the fact that majority of the time there's actually some phenomenal days, and the pretty average day is very quickly forgotten. Looking back now on what's happened over just 2 years, I don't remember what happened in those individual days, but you just have to keep that long-term focus as well.
Yeah. I know that this is a question that Christine had because new experience for her, and it's something that we've obviously talked about before. But, if there's any business owners listening to this thinking like, well, why would you give away equity in a company from day dot? And obviously I think you've kind of alluded to that a little bit in the sense that the scale of the business and the scale of the funding required almost forced your hand a little bit in that sense. But what would you kind of say to people that are perhaps struggling with that decision, or thinking about, is it time to accept external investment, and how do I kind of come to terms with that?
Yeah. There are clearly some businesses that don't need, there are some small businesses where, that's not something that's on the cards. But if you've got a business that is growing significantly, or you've got opportunities that you need to go and capture, you may not be able to do that in of yourself and growing organically. It may be better for you to go and get more capital and bring on more shareholders so that you can go and tackle that opportunity and grow faster. And it just comes back to that simple adage, right? I guess it's better to have a small piece of something big than 100% of nothing. Yeah. And so having other shareholders on board also can be quite good in terms of your discipline and your processes. It's not just then about yourself. The same goes actually just when you start having employees and others as well. If you go from being a sole trader and working for yourself to actually having those first employees, be it a trades business or whatever it is, you operate differently because you've got a lot more responsibility. You have that on your mind about the fact that you've got shareholders to keep informed and to keep on this journey with you, got staff to look after. So it's a great disciplinary thing, and it will help you grow further. And I think if there's apprehension there, it's probably also just reassessing why you're doing it. Because I think for any great business to succeed, you've got to be passionate about it, right? And I'm this is my thing. Like I
don't plan to do anything else for the rest of your life. Sorry.
But that's pretty much it. It's a sector and thing that I love, and I love, and it was the same when I was at Smartshares and NZX. It was the work that we were doing there. I loved it because it was helping something grow, and that's what I get excited about. And if you're questioning bringing on other shareholders, then it's kind of, well, are you doing that because the focus and your main area of concern is the financial element of it? And if that's the first thought, then that may not be the best starting point. The first thing you should be doing something you're really passionate about, or feel like you can make a fundamental difference with, because the financial elements and the reward from the financial perspective will come if that succeeds. So, I think that's something also to think about.
That's a very good point. This is backtracking a little bit, but I'm really curious personally, but I think a lot of people listening would be, how do you actually go about getting investors and then also raising capital as you grow? Like, what is the process to do that?
There are a range of processes, right? You can go out there. A lot of businesses are started with mum, dad, and friends. And that
what
creates...
do they call them? It's like fools and family.
Oh, yeah. And that is something that you've got to take very seriously, and you've got to be very open with that, because as Kat has mentioned, any business, the failure rates of any business, be it the small little mum and dad store to any other major startup, 9 and 10 or whatever it may be, a significant number of them will fail. And you need to be really clear and open with each other as friends and family about what is the risk, and they've got to be comfortable that they're putting in amounts that they lose. I have invested into family ventures and it has gone to zero, but I was very comfortable with that, and it was a very open conversation, and there was no feeling of animosity around it. If anything, I know the family with that felt really guilty. And I said, well, this is business. I went into this with open eyes, understood this. So you do have to be really blunt with that sort of piece, and be open, and also make sure that, there is a responsibility on you as somebody that's raising money not to probably take advantage of those people either. Because I think sometimes family or friends can be overly generous, and it's probably beyond their means or what they should realistically be putting into such a high risk thing. The next stage beyond that is obviously going out there and finding money. And that could be through an angel group, it could be through high net worth individuals, it could be through a fund. We went down the path of, shoulder tapping some people. Fortuitously, managed to meet a few people that were broadly involved in the financial services sector, had knowledge of it, and were looking for opportunities. And so it was one of those things where Kernel was a complex business to explain to somebody. It's a highly regulated business. It's something that they have to put great faith into and believe in. They have to understand the sector because, again, coming back, it wasn't a business that we had some track record to show or a website and a product that was selling to try and raise money for. So it's very different to most other capital raises. We had to find somebody that understood the vision more so than probably a lot of other things. So we went out there and got those individuals, and then from there we raised some capital and agreed a bunch of terms and how that was going to look, and then you go through quite a long process then of setting out what do we have to deliver for that in terms of there'll be shareholders agreement, there may be some key terms and restrictions around things. And from there, we did go out and did a further capital raise where we were again able to kind of reach out to a network of high net worth individuals who, again, were very experienced in the financial services sector that understood what Kernel is about and what how much impact we can have, and really wanted to back that journey and kind of create a change in the financial services, deliver better outcomes for customers. So probably quite different to a lot of others, where a lot of groups may go out and they will go and do the fun thing of presenting at angel nights and, pros and cons of all of these things. It's quite nice, I think, having a tight-knit group of people who really understand and quite passionate about what we're working for as well. When you can have staff and shareholders all aligned around the customer and what we stand for, it puts you in a great position.
Yes. It definitely is relative, I think, as you touch on to what your business does and the complexity of that as well. Because we've had in subsequent capital raises, when we've been looking at bringing in new individuals, some people that have experience investing in startups, but just said, hey, actually, this is not my expertise. I don't really understand the financial regulations. I don't understand the whole licensing piece. And I don't for that reason, it's not the right opportunity for me. And that was less about obviously the business or the opportunity and more about, what's their level of comfort. And I guess then the nice thing is ongoing relationships. If you have people that deeply understand the space that you're working in, it makes it so much easier.
Our relationship with shareholders is probably very unique in the New Zealand context. Very close, very easy to get on with, very much aligned to the vision. And I guess that is one, insight or tip is to be picky about, right? It's not just about money. Because if you are going to raise money for your business, it can be very tempting just to take the dollar. It doesn't matter where it's come from, right? But it's the same with finding great staff. It's the same with finding directors or anything else, right? You've got to find there is more than just the dollar element. And if you're thinking long term and you align yourself with people from all elements, from internally and shareholders, life and the opportunities are far greater and it's easier to execute on if you actually have people that are aligned with that thinking. Because as the cat's point, you could easily go out there and just get somebody that's,
got deep pockets.
Got deep pockets in the first dollar that comes along, but they may turn out to be completely misaligned with what you stand for and try and drive you to another direction or hound you over something that you don't feel comfortable with, right? So that's another risk that comes along with not finding somebody that is aligned to what you stand for.
Yeah, definitely.
One thing for us at Kernel is that we've never had there is no shareholder or anybody involved in this business that is misaligned with what we care about, what we're passionate about. And, for us, that's been a fantastic part of our journey, is to being able to have people that support that.
Definitely. I was just thinking about what you said in terms of having the expertise. That must apply exactly to the board as well, in that you need that expertise from that level to drive down, because ultimately they need to fully understand and have expertise, and then you can leverage off their networks and things like that as well.
And I think the networking is obviously totally relevant, particularly in the space that we operate in. But, you know, for any business, it's like, you know, to Dean's point, you should be looking at these people as what else can they offer me as the founder or the person raising capital outside of just the money? Like, do they have other skill sets that we could lean on, or, you know, networks or people, particularly if you're looking at hiring, you know, growing your team for the first time, like that in itself is a hard challenge. Having people that can point you in the right direction for those skill sets. And I know, like, initially one of the things that Dean had said to me was, we currently in the business don't have a CFO, and that was because that was a skill set that was covered well and truly by members of our board and some of the shareholders. So, you know, those sorts of skills and I guess feedback feed into what your team and, you know, resource planning would look like as well.
Yeah, that's such a good point.
So many things to think about. Other than just money.
Yeah. So there's a lot more to starting a business than just the idea. Like, you know.
I do have a question that I guess may be, well, a double-edged question, because you touched on it before when you were talking about like the family investing in startups, is, you know, do you personally see investing in your business, property or shares, like which one of those as most risky? Because we know that a lot of Kiwis view the share markets as scary or as a daunting investment, but a lot of people we know, you know, New Zealand is a country of small and medium businesses and a lot of mum and dad run businesses, and people quite often are comfortable to put their money into a business. So how do you kind of view that, I guess, in terms of your levels of risk?
Yeah, look, investing in a business, particularly, you know, we were talking here about not buying shares in listed companies, but investing in businesses generally is probably one of the higher risk things that you could do, up there with cryptocurrencies.
Had to get it better now.
No, but it is. It is the investing business, and I think that's where it comes back to. I guess a lot of people probably at some point in their life will be asked to invest in a friend's idea or some form of thing.
Be approached with this like, cool thing.
And it is highly speculative, and I think you guys have touched on before, like the love of money element of this. And there's some real hard truths to have about when you're approached or presented with those opportunities. I think it's a very risky thing that for a lot of people actually isn't the right thing to do. You know, there aren't, you know, most of us probably shouldn't be investing in small businesses. The potential return is not great enough. The risk is significant, and more often than not, it's probably a large portion of any sort of assets that we do have.
Yeah. Not to mention damage to any potential relationships, if it is the family and friends route, right?
And then, so I guess the next thing is like property is incredibly inaccessible now. And in this environment, I would say equally, you know, a very risky investment. You know, it's not going to deliver the same return. So, you know, you do have to think seriously about how you're managing your money and where you're going to put it. And thankfully, you know, digitization means that there are more options available that are accessible, and you can grow your money for the long term. And you can do it in a way that isn't such high risk as, say, investing in a family-run business.
Yeah. Cool. Well, lastly, I mean, from the outside, lots of people would be like, oh, Dean's made it. You founded a company. You're a CEO. You know, building a high-performing team, if we do say so ourselves. And people, as we said before, can be lured in by what I guess looks to be the dream. So is it all that it's cracked up to be? And are there things that you wish that you had done differently or maybe known from the start that would have made the journey a bit easier?
I don't think there's anything would have done differently or made the journey easier. The biggest thing I keep weighing up is, you know, with any business is there's so many things to deal with, more than the idea. And that's as simple as things like, every day you're faced with challenges and things to think about. How quickly you should be growing, strategic decisions. And for us, we've made some really clear strategic decisions from day one, and we're dealing with that, and we believe that it's the right decision. So you get presented with all those sort of things all the time, and nothing to date has led me to think we should have done anything differently. So that's pretty clear. The lifestyle thing's fascinating, I think, generally.
Start a business, like, you know, not work your dream hours, and then you end up working 24/7.
Like that reel that's going around.
And knowing Kat for a while, Kat knows that I had a real pet peeve with this whole kind of Insta entrepreneur thing. going on a couple of years ago.
Of like, your life is just traveling when you're an entrepreneur. You can just like get on a private jet and go to Europe.
So let's be really clear. Starting a business and going and raising a few $1 million from somebody doesn't mean that all of a sudden you should be dining at fancy restaurants and buying Rolexes. That money isn't yours. And I got really angry seeing some people go out there and start businesses and think that, or treat the money that they raise that's meant to be for growing the business and for everybody's shareholders and investing in staff as a personal pot of money to go and, have the fancy lifestyle to travel the world with. That's not what it is. And, there's a clear distinction, but again, I think it comes back to what we stand for, what everybody in the team stands for. So that's a personal attitude thing. And I think generally, though, it's easy to be lured into Instagram is great for luring people into, this false lifestyle and living. I would say when I moved from Wellington to Auckland, I genuinely was kind of gobsmacked at Ponsonby. Now,
Tell us more.
I voluntarily moved to renting in St. Mary's Bay because I knew nothing about Auckland. All I knew was I found somewhere that I could have that was central and I could walk to work. So that ticked the boxes and it was a fair value. But walking through Ponsonby absolutely blew my mind that everybody was 30 years old in active wear and driving European cars. And that's so different to Wellington, which culturally is far more conservative, don't care about vehicles. But again, I think it's that whole testament to, hey, reality is most of those people that are posting their cars and fancy houses is leased. It's racked up to the tilt in debt. Behind the scenes, it's extremely stressful. So, yeah, I think it's very easy to be misled with social media and others that kind of promote lifestyles either from, it's easy to run a business or a startup. And, there's clearly, I guess, within the startup world as well, like globally, there's been a lot of money flowing around. There's been some startups that raised a significant amount of money, and it has kind of created this cultural element of, it's the cool thing to do.
Yeah, chase your dream, get the money. It's so easy.
But that's not really what it's like behind the scenes. It's not for 99% of businesses, and it's like everything. Don't get caught into this FOMO or misbelief that this is, some easy success story.
Yeah,
For sure.
I remember reflecting on conversations I had with my sister-in-law when she obviously was running her own business, and we've talked about that a little bit before, and when I was thinking about joining the Kernel team, and I was chatting to her about that, and she said that if I had my time over, I would never be a founder. I would always be a 2IC, because you get to make a material difference to like the direction of the business, being in a leadership team and supporting that person that is the founder, but you just don't have that level of like weight on your shoulders that you can basically never disconnect from. Sorry to make that sound
That sounds about right. Yeah.
But again, I treated that, I would say I treated like engagement with like you and Stephen and others the same way as the family piece, because I guess what was different with Kernel as well, like the first few hires and people that came involved in the business up until very recently were people we knew, which is a bit like the whole friends and family thing. There are some great pros to that. It's like, I know people's skill set. I know how great and talented they are and how much they could add to Kernel, and can work together in all those sort of elements. But it also has that weight of, well, shit, if this goes wrong, I also know them, and so it's that.
They have a family to feed.
Yeah, exactly. So there's that very much that same tension with the family and friends coming to invest piece, but treated the same. I think I was very comfortable that, everybody was very eyes wide open to what this was. Kat as well had been experienced within dealing with startups and other things. So we were all very conscious of all the possibilities that could come with this thing. And so again, coming back to, I think it's really important, and it's a important responsibility for anybody that's starting a business, that I think you should go about it like that, whether it's raising money, whether it's finding staff, being open, honest and transparent about everything. I guess it's the same with how we still operate today, is everybody's involved with things here. And by doing that, you can share in that. I guess it's a reflection of the fact that you have great faith and trust in everybody around you, and to be part of that. And it will mean over the long term that there is no surprises. And if things do go certain directions, everybody was aware of it and everybody's been involved in that. And
Yeah, nice. Any last questions from you, Christine?
I just have one.
Go for it.
What keeps you up at night?
How much time do we have?
Yeah.
It's look, reality is it's the mind is constantly spinning. The world is moving incredibly quickly. We're operating in a space that's being, financial services being disrupted, and we're part of that disruption. And we are trying to change, the world for our customers. And that means there are a lot of things to constantly think about. What's happening globally around the world? Where are things going? And I think the mind just spins on the possibilities. So you do wake up in the middle of the night with some sort of harebrained idea. And I think the team well knows that actually I can be chronic at times for coming in and just like, oh, what about this? And lobbing the ball over the fence. So I think we need to look at this. So if anything, I think the team is worried if I am...
not thinking about it.
Yeah.
Get a good night's sleep.
Get sleep.
Exactly.
Yeah.
Cool.
I love it.
I have one other question that I just really wanted to ask because I think it's probably important is, a lot of business owners struggle to diversify at some point outside of their business, right? Particularly if it's a business that's going well, and all of a sudden you can end up down the track with quite a large portion of your wealth in one thing. How are you thinking about approaching this going forward?
That's a fantastic question, because there are great examples of that. There are great examples of some people who have made significant wealth, and then there are others you clearly see that are quite active. And there are two elements to it. One is actually getting to a position where you can kind of give back and help others on their journey. I think that's what I'm excited about. At some point, hopefully I'll be in a position in the future where I can have some shaping of somebody else's business journey.
Yeah.
Because again, that's an area I'm passionate about. It's helping things grow. Like that's what I get really enthused about. So that's something I think I'd like to get to. At the moment, it's just that mental capacity. Well, not the capacity, and on all fronts. But yeah, I think that is definitely somewhere I would see it being of interest. And again, it's because of the personal interest in it. It's the idea of seeing something grow and being part of that is the thing that would be exciting. You do look at others out there who've gone out there and have just purely dedicated themselves to some cause. And it's just really what people, I guess, are ultimately passionate about. And come back to where they're going to add skills. I've no interest in, there are people out there that just love to be investors and not contributing more than capital. That's not something I could ever see myself being involved in. Just it's not of interest.
Fair enough.
Yeah. Nice.
Love it.
Any last comments or things that you'd like to, I guess, leave the listeners of the pod with?
Or tips. Life tips.
It's a random life tip indeed.
Why not?
No. Well, it hasn't been as brutal as I thought.
There you go. So what he's saying is come on the show.
Yeah.
No, it's been good. No great tips. I think I've shared all the personal stories. Just excited for everything that's in front, and same for you guys for the podcast.
Yeah. And good to have these conversations, I think, because I think on the business front as well, it's hard to get those insights sometimes, if you don't have the connections or people in your family to talk to about this type of stuff, or B, it's just, it's very hard to rock up to someone and be like, hey, tell me about how you raised money for your business and like how successful actually is it? Because what you see on the surface isn't necessarily what's operating behind the scenes.
Yeah. That's another one. Anyway.
Cool.
Yeah.
No, it's good. Like I say, I think encouraging these conversations is really important, and being open about them, because open about money generally is a fantastic thing. And I think we are seeing a fundamental cultural change across New Zealand with that. Over the last 18 months in particular, people are increasingly engaged about how they're managing their money. And just even personally, I guess there is no reason to not be open. I share all the time with friends about our own situation, and friends I know about how much mortgage my friends have and how much they're earning, and it's a great place to be in when you can treat it like that and not look at it as a benchmark and just have it as an open conversation.
That's a very good point. Love that life.
One tip, there you go.
Love it.
I'll take it.
Yeah.
That was a good one.
Open sharing. Great. Love it. Thanks for joining us on the show.
Yeah,
Thanks.
you.
Too easy.